Hello everyone and welcome back to the channel. In today's video, we will review the gold outlook for the week from August 10th to August 15th. After spending several sessions consolidating inside a triangle pattern, gold finally produced a strong breakout to the upside. Price not only broke the trend line, but also created a change of character, followed by several breaks of structure. Gold is now trading around 4,340, and the main question for next week is, will gold continue moving directly toward the supply zone above? Or will we see a correction before buyers step back into the market? Let's take a closer look. Previously, gold was compressed inside a triangle pattern. We had a descending resistance line above and a rising support line below. After several tests on both sides, buyers eventually took control. Gold broke out of the triangle, moved above an important previous high, and created a change of character. After that, the market produced a break of structure and began a strong bullish expansion. An important point is that after the breakout, price barely returned inside the previous triangle. This shows that buying momentum remains strong. After the breakout, gold moved through the liquidity above the previous highs and continued higher. The market then created another break of structure before reaching the current area. So, from a 1-hour perspective, the structure remains bullish. However, after such a strong rally, I do not prefer chasing buy positions at the current price. A better strategy is to wait for a correction into support and then look for confirmation before buying. The main area to watch above is around 4,450. This is an order block combined with a previous rejection zone. If gold continues higher next week, this will be one of the most important areas to monitor. As price approaches this zone, traders should be careful about chasing new buy positions. If we see strong rejection, the market could experience profit taking and a deeper correction. However, if gold breaks above this supply zone with strong momentum and holds above it, the bullish trend could continue. The first support area I'm watching is between 4,230 and 4,250. This area combines an order block with liquidity. If gold corrects back into this zone while maintaining its bullish structure, it could provide a good area to look for trend following buy opportunities. However, I would not use a blind buy limit. I prefer to wait for price to enter the zone, sweep liquidity, and then show a reversal signal on a lower time frame. A bullish change of character or a strong impulsive move higher would provide better confirmation. My main scenario for next week remains bullish. Gold may first correct into the order block below, collect additional liquidity, and then continue higher. If buyers successfully defend the support zone, the first target will be the current high. After that, if bullish momentum remains strong, the next major target will be the order block and rejection area around 4,450. The important point is that we do not need to guess the exact bottom of the correction. We only need to wait for price to return to a good area and confirm that the bullish structure is returning. The second scenario is a deeper correction. If the area around 4,230 is clearly broken, gold could continue lower toward the fair value gap. The next important area is around 4,120. This is also an important liquidity zone from the previous bullish move. If price reacts strongly from this area, buyers may still return. However, if this level is also broken, gold could move back toward the major breakout and support zone around 4080. If that support also fails, then we would need to reassess the current bullish structure. My trading plan is simple. The current structure remains bullish, so I prefer to buy the dip rather than sell the rally. I will not chase strong bullish candles. Instead, I will wait for price to correct into an order block or liquidity area and then look for confirmation on a lower time frame. If gold moves directly toward 4,450, I would rather watch the reaction there than continue buying out of fear of missing the move. In a strong trend, missing one trade is much better than entering at a price where the risk to reward ratio is no longer attractive. To summarize, gold has broken out of the triangle pattern and confirmed a bullish structure on the 1-hour chart. The nearest support zone to watch is between 4,230 and 4,250. If the correction becomes deeper, the area around 4,120 will be the next important level. On the upside, the major target and supply zone is located around 4,450. Because the current structure is bullish, I still prefer looking for buying opportunities on corrections rather than trying to sell against the trend. However, always wait for confirmation, use a clear stop loss, and manage your position size carefully. Everything discussed in this video is for educational purposes and represents my personal market view. It is not financial or investment advice. Thank you for watching. Remember to like the video, subscribe to the channel, and leave a comment telling me whether you expect gold to correct first or continue directly toward the supply zone. Thank you, and I will see you in the next video.